good morning. You're watching Market Cafe with me, Snehisha, and with me is Shreyansi Singh. And well, this is a show where we'll take you through all the important things that were happening globally as well as domestically when we were fast asleep last night and this morning. All the action in the global markets, be it equity or commodities. And in the second half of the show, we'll also get into stock-specific details and bring you the list of the stocks that could be potential buzzers in today's trading session, as well as what brokerages are flagging off for us bright and early this morning. With that, let's kickstart the show with the global handover. Shreyansi, tell us what's happening in the US. We had CPI coming out. You also have some commentary coming out. So tell us what's happening.
Absolutely. Very interesting what's happening, of course. But then when you look at futures tied to the Dow Jones, you're looking at a dip coming in of about 6 points or less than 0.1%. S&P 500 futures as well as NASDAQ 100 futures were also within 0.1% of the flat line. Now the move in futures comes after a rally for stocks that saw the S&P 500 as well as NASDAQ each gain more than 1%. The rise for equities came despite a consumer price index that showed inflation was mildly higher than expected in February, and that is something that we're seeing coming in. And now notably stocks jumped even as bond yields moved higher, so that is an important move that you're seeing coming in. When you're looking at European markets as well, they closed the session in the green, extended earlier gains. And when you look at on a sectoral basis, the European markets, the auto sector was up 2.4%, utilities fell 1.2%. When I'm looking at DAX as well, that saw an uptick of over 1%. And CAC as well saw an uptick of nearly 1%, but then we're nearly winding down the earnings season when you look at the US. So this data set that we've gotten in the US, inflation rose again. Consumer prices experienced a 0.4% rise in February, marking a 3.2% increase from the same period last year. Excluding volatile food and energy prices, core CPI also rose 0.4% for the month and 3.8% on the year. Both slightly higher than anticipated, it still remains above the Fed's goal of 2%. We also caught up with Santosh Rao, Head of Research and Partner, Manhattan Venture Partners, and he talks about the key highlights to take from the particular data set and discusses whether or not the slightly hotter data will impact Fed's rate cut decision. Listen in to what he had to say.
So I think we're still counting down to first rate hike in June. I don't think that picture changes much. The key thing is, okay, the headline numbers are slightly up, the core was slightly up, but that was essentially expected. Wasn't a huge surprise. But the key thing was the rent portion of the thing came down, which is a good part of this whole thing because that's been a big driver of the CPI in the past. So I think that's a good thing. And the PCE that the Fed watches, that's pretty much in control. See, what's happening is the goods inflation is pretty much under control. In fact, it's trending down. It's the services portion that's proving to be very sticky, and that's where the whole issue is. But there, the rent proportion of that is coming down in this data, so that's a good portion. That part is very helpful.
All right, well, that was on the front of the US CPI and how the US equity markets, the Wall Street did yesterday. With that, let's also take a look at what oil and gold have been doing. Let's start by looking at gold, because gold prices remained under pressure on Tuesday, dropping more than 1% at one point in the day after a hot US inflation report dimmed prospects of the Fed Reserve cutting interest rates anytime soon. Spot gold last fell to 1.2% to $2,156.8 per ounce, retreating from a record high of $2,195 that it reached on Friday. Now, US gold futures also settled 1% lower at $2,166. With that, let's take a look at what's happening with the world of oil, because initially crude oil futures edged lower yesterday as traders weighed the latest US inflation data and OPEC's demand outlook for the year. But what's key to note is over the course of the day, you had WTI that ended the day with an uptick of 0.6% at 78, just north of $78 per barrel. You had Brent also with an uptick of 0.6% at $82.3 per barrel. That's where Brent was at last. Now, OPEC held to its forecast for 2024, with oil demand expected to grow by 2.2 million barrels per day, according to the cartel's latest report. Crude supply.
If you like this video, then like, share and subscribe to ET Now.